Hi, my name is Arjun Chaudhary, and welcome to Energize the Tech Revolution. Today, we have a very special guest amongst us. Dennis Wong, also known as the Wong Man, is a seasoned investor specializing in public equity markets and real estate. As an educator and coach in value investing, he empowers individuals to master the investing strategies and processes of Warren Buffett, guiding them towards achieving personal financial goals, financial security, and freedom. Prior to his investing career, Dennis was a registered professional engineer with a robust background in the energy technology sector. He has held key positions as a professional engineer and management executive at several multinational companies and a top Fortune 500 company, contributing to innovative advancements in the industry. Welcome to the show, Dennis.
Well, thank you for having me, and thanks for the kind introduction.
Absolutely, Dennis. So really excited to learn from your expertise in value investing with a focus on renewable energy sector and other aspects of the energy sector. So firstly, Dennis, your name is Dennis Wong. How in various social media outlets you refer yourself as Dennis Wongman. So what's the backstory behind this? Please explain.
Yeah, I got asked many times. Well, long story short was, that's how I was introduced by my wife at our wedding. So, because at the wedding, and she was saying that, well, every other girls or other ladies, they're looking for Mr. Right, and well, she ended up with Mr. Wong, the Wong man. And since then, many of my friends, my ex-colleague and clients just go, "Hey, Wong man," and so that's how that name came from. But here I am, the Wong man. I always try to do the right things, whether it's at home or in business. So there you go, Wong man trying to do the right thing.
Very interesting, Dennis. Well, I hope your family members and friends watch this episode. Um, So, Dennis, in terms of your educational journey, you
Mhm,
have a bachelor's in science in electrical engineering. Now, what
mhm.
inspired you to pursue electrical engineering?
Oh wow, I think. Well, thinking back in the days when I was in, I think when I was still a teenager in high school, I think there are many factors. There's like everything else, there's no just single factor that lead us to something. So I would say among all things is I mean I love science. In school, to be honest, I love both arts and science subject, and I think it all comes down to the fact that I enjoy in science, right? There's black and white of answer, right? Either you're right, you're wrong. While in anything else, let's say in when I write an essays in English or literature class, and it's subject to interpretation, and there's always gray area on how the teacher would look at it, and but in science, right, whether math or physics or chemistry, you either right or wrong. So I found that uh, it might be easier that way. And on the other hand, it's the sense of achievement. Um, when you get it right. And when you get it wrong, it's much easier to go, how did I get it wrong, right? And it's not about the point of view or perspective. So I think that's one reason. And the other one is I always like to, build things, and always fascinated by how things are being created and invented and built, and some of the technology based, whether it's products or so that's why I was drawn to, hey, um, engineering is the way to go to create something that I mean using technology, right? But of course, reality also, I guess you probably also understand very well as you know growing up in a Asian family, Asian culture, always want to go for, something professional, build a professional career. So we all come from a family of just like any other ordinary family. So one way to uh, make advancement in life is to try to build a professional career. So among all things, so I got drawn to engineering. So I would say looking back, that's how I started. Yeah.
Amazing, Dennis. Being an engineer myself, I can totally resonate with that. Um,
Right.
Absolutely, Dennis. So now, in terms of your professional journey, you started off as a project engineer, and then you made your
Mhm.
way to a business development director in General Electric, where you're working with energy technology. Now, before launching your own value investing coaching program business. I would love to learn
Mhm.
more about your complete professional journey.
Wow. Well, complete it will be will take up probably longer than this podcast. But in brief, I would say that like many other engineering graduate, I started, with a job here in Calgary and working as a young engineer, obviously utilizing what I learned in school and taking on a technical role doing system engineering design, etc. And initially, I was involved in the more of automation industry, working on project, building system, automation system for different type of industry, whether it's the infrastructure, logistic, airport, uh, water, wastewater, refinery, automating, those process and using automation product and system, etc. And then eventually I was settled in the power utility industry, electric power utility industry, working on power grid management, hardware, software, more focusing on data and information collection and analytic and enabling management, whether it's in real-time operation, maintenance, and also asset management. So dealing with cybersecurity and all those. And so that's how I started in engineering. And over time, I got into, advanced to managing projects rather than just focusing on the technical part of the work. And in project, I started, managing project non-technical part of the aspect, I should say, aspect of the work and working, coordinating, right? Working with people. And I found that very enjoyable, in addition to just focusing on the technical portion of the work. And now I have to work with more people, whether it's internally in the company to coordinate with various departments to make things work, and also working with clients, right? Clients, locally and also overseas, and traveling to sites to conduct testing, commissioning system. And I found that is very, very rewarding when, every time I'm dealing with a new clients in a new area, even though it's a similar type of project, but there are so many other variables that I have to consider, whether it's cultural related and or local regulatory related, they're all different. So I found that, I'm learning new things every time. So I enjoy more with working with people. So slowly, I'm more advancing into more about the business aspect, sales, marketing, and a little bit of operation, coordinating with research and development and etc. So that's how I move into more of a management side in the business. Whether I was, for a long time, I was working for General Electric and then also the French company Alstom as well. So very, very fortunate to get the opportunity to work with people from around the world and also clients around the world, and also get to experience all those different country and culture. So that's how I move into from technical to the management side of the business. But I would say that along the way, how it pivot to currently providing coaching and also in investing is that because of that progress or advancement, and I understand that behind everything, doesn't matter whether it's the most advanced engineering project or technology, is business. It has to be, economically sustainable, delivering true value, whatever we do, right? So only by doing so, that would be a viable. So the business side become an interest. That interest growing stronger and stronger. So that's how I got into the business side and also investing as well. And now I'm providing a coaching program on investing. So I think it's a long story short.
Such an amazing and inspirational story, Dennis. Now, under the umbrella or bracket of stock investing stems three
Hmm.
branches, those being value investing, which obviously you specialize in, and then there is day
Hmm.
trading, and then there is swing
Okay.
trading. Now,
Hmm.
can you explain the difference between these three categories?
Very good question. Yeah, I think a lot of people hear about all these terms all the time and not sure, but not sure exactly what they mean or the difference between them. But again, now we got into from, technical or engineering aspect to more on the other side, which there's no absolute right or wrong. That's now I got the hang of on things on this side, and it's all subject to interpretation. But I would say my personal view is that it's very simple. Uh, Investing, okay, we'll talk about value investing later on. In terms of investing, we're talking about putting our capital on certain asset and enabling whether it's the asset or a business to grow with our capital. And over time, we believe that, as the business growth or the asset growth in value, our capital will grow. And that's investing to me. That's investing. And it would take time and it would take effort. Um, Trading, basically, buying and selling, right? It doesn't matter whether we are as kids, as children, we're trading uh, baseball card, hockey card. And nowadays, kids and my boys, when they were young, they were trading Pokemon cards, right? Buying and selling. So that's trading. So in trading, there's you mentioned about day trading, which means that, in and out, buying and selling, or selling and buying, reverse, within a day, right? Take the profits or stop the loss and you get in and out. Swing trading, basically, and, you know, um, trading based on the momentum swing, right? So the price swing, momentum swing, and whether it's in terms of a few days, weeks, or maybe a couple of months, and that's swing trading. Now, in my opinion, my personal opinion is that when we trade, we're just trying to optimize and take advantage of the price movement and trying to make money from it. And when we trade, against other traders. Essentially, in such a short time frame, we're not investing in the underlying security or asset. Whatever during the trade, whatever you own during that short time frame of one day or a couple of weeks, there's so little time or so short that the underlying asset or business can hardly grow in value. So if there's a price increase that we're lucky enough to make money, that money is coming from another trader who purchased our share or our asset. So we are making money from other trader. So that's my take. And when we lose, yep, another trader is right, I'm wrong, right? So that's trading. So in trading, basically, traders are trying to compete with each other, trading against each other, literally trying to make money from each other. And that's how I see trading to see who's more right than the others. In investing is more of a long term, truly owning certain type of, well, there are many different asset classes, and we are investing in the assets in the business and believing that the value will grow over time, and so will our capital, because ultimately that growth in value will be reflected in the share price. So that's how I look at investing. Now, specifically to your question on value investing, is that there's a discipline or strategy. It's more of Benjamin Graham and Warren Buffett way of investing. Basically, value investing is describing the type of investing style where we would value a business or assets first, and knowing the value of it, and then determine what's the price that we're willing to pay. Right. So quite often in value investing is that the investor don't want to pay overprice, right? Overvalue, because those premium or overvalue is risk. So we always try to look for great business, great asset, and knowing how much it's worth, and then willing to pay either the fair value or at a discounted price. And that's what value investing is about.
Now, Dennis, you just explained the general concept and philosophy of value investing. So, thanks for sharing that. Now, for our listeners and viewers who are new to the concept of value investing, if you were to
Mhm.
just maybe describe the process of value investing in 5 to 6 steps, what would that
Mm.
be?
Well, sure. Actually, value investing is rather simple. Um, so it all boils down to, well, I would say step number one is um, make sure that we know our what I would call these, our circle of competence. Basically, establishing our circle of competence and try to stay within that because that would give us the maximal or maximize our chance of success. So this so-called circle of competence start with number one is make sure that we invest in something that we are interested in, right? It's like everything in life that if we have a strong interest or even passion in certain business, certain company, or certain, say, industries or sector, that we will have the motivation to follow up and to regularly, keep up with it, and or even uh, something that we don't understand, we would have the motivation to learn about it. So because investing is a long term, right? There's no point to invest in anything that we're not interested in. And even though if certain business make money, very profitable, but if we have no interest, then we would not follow up, stay on it as well. There's no point to own it. So that's number one. Number two is something that we can understand. We don't want to own something that we don't understand because being a business owner, right? We have to look at ourselves as a business owner. As the investor. So without understanding the basic, of the industry or a business, then we won't be able to understand, its financial or if there's any risk, if things have changed. So, but we don't need to understand it to the point that to manage, excuse me, to manage the business because we're not an operator, we're owner investor. So I would say the basic understanding, but if we don't understand certain thing because we have the interest and the passion, we would learn about it, right? We would seek out and learn about it. Um, Third is, if we have any financial involvement, whether we're spending money or making money from certain industry or company, then naturally we would have more insights in that. So that's what I would call the circle of competence. So start with that as step number one. And I would say, then with that, based on that, step number two is look for the best business within that category, right? The best business. And we have to learn how to define a good business as, how to filter them, screen them based on some, qualitative assessment, right? Where the business has strong moats, right? So or basically it's a durable competitive advantage, right, over other business, right? Whether they have a strong management team and learn how to interpret their financial and make sure that it's a good has a very very strong financial a foundation and also very profitable and growing. And that's very important because we're investing for growth, to grow our capital. And then once we find those company, then the third step is know how much it's worth, calculating or evaluate doing the valuation of the business. Once we know how much is the company worth and how much is worth on a per share basis, then step number four is to buy it at a fair value or undervalued at a discounted price. And so we would be now, we're not timing the market in value investing. We don't look at ourselves, try to time the market, but we know that we're not willing to pay overpriced or subject ourselves to risk. So we only buy it when the moments, right? When there's certain market events or company or industry specific event, and that would drive the price down. And when we have all those events going in and out or uh, on a regular basis anyway, right? So we look for those events, and that's when we buy and buy it at a fair or even a below value price, right? And quite often during that step, we will also use, some of the technical interpretation to try to optimize whether it's the good time to buy it or not. And again, that's not really timing, but we know that is the best price that we can buy those assets. And eventually, finally, we'll just wait for the business to grow and continue to monitor, read about it on a regular basis, quarterly earning, annual report, etc. And repeat the process. And that's it. Rather simple. Yeah. No, what we can understand, what we're interested in, find the best business, best company in those category, in that area, know how much it's worth, right? Number three, buy it at a fair or discounted price. And number five, just repeat, wait and repeat. As long as the business, the thesis, investment thesis remain intact, unchanged, and the company still growing, still, have those strong competitive advantage, delivering profits and growing, we'll just stay on. Let them manage it, and as we are investor owner, so we'll just wait. Actually, that's the most difficult part, being patient and wait. As Charlie Munger said, the big money is not in the buying and selling, it's in the waiting. So I would say those are the five major steps in value investing.
Those were such helpful steps, Dennis. Now, let us dive deep into the topic at hand and the theme of this podcast, which is value investing in energy. We will start off
Hmm.
by focusing on renewable energy companies, and then we'll move on to traditional energy companies, oil and gas. So,
Yeah,
firstly,
yeah.
Dennis, as a value investor who's looking to invest in renewable energy companies, what are the
Hmm.
factors they need to take into account? And also, if you can explain this using some company names to provide some context for our viewers and listeners, it would be very helpful.
Sure, sure. Um, I would say investing in, let's say, renewable energy company, fundamentally, there's no difference than investing in any other company or any other business. But of course, we need to be aware of different industry, different category would have different business characteristics, different risk and reward profile. I think those are the things that we need to be aware of. But fundamentally, business is business, and especially for value investors, we're not willing to take too much risk. We want to, protect our capital first, right? So I would say just like any other companies or industry, the first is business fundamental, right? The quality of the business, their capital structure, whether they're profitable, their earning, their cash flow, understanding their products or their services, right? What type, whether it's a unique technologies, how unique, whether they have their own proprietary technology, that's their value, right? And uh, cash flow, earning, very important. Um, their capital structure, etc. But I would say for renewable energy, the few things that I would pay attention to is as they're in the forefront of technology development, I would say how uh, how durable that technology is, how dominant that technology is, whether they are a dominant player, and be aware that things could be changing very very fast and rapidly as well, so they can easily be displaced as well. That's one. The other one is very very important is regulatory environments or regulatory compliance and etc. With renewable energy, I think especially with a lot of the new technology, and we have to be aware of how government regulate those, and not only regulation, but also subsidies, right? It could be sometimes it could be a certain topic, subject, or category or business can be very very political. Uh, a certain time, it can be, the government is 100% behind it, a lot of incentive. And quite often, it get to the point that the revenue is, their big part of it is government incentive or government subsidized. So, I mean, it's good, right, as a business, but is it viable? Is it durable? the moment the government, stop subsidizing that industry, is that is that business still viable? I think those are things that we need to keep in mind, right? For example, in the latest, I think it just yesterday, the U.S. Passed the big beautiful bill, and as part of it, and there's going to be taking away the incentive subsidizing EV purchase, right? So that's dollars, $7,500 per purchase on electric vehicle. So will many of the consumer will continue to buy EV? How would that impact EV manufacturers' business, right? So I think those are the things that we need to keep in mind. Yeah. So I think you mentioned about well, the other thing I also want to mention about is that now renewable energy by nature, we relying on nature, whether it is typically solar energy, wind energy, and hydro, and all those, and how reliable are they? Because we don't control when the sun will shine and when the wind will blow, right? So how would that impact those company, their revenue and etc. And whether the company that we're looking at, are they power producer like what I just mentioned, wind, solar, hydro, bioenergy, etc. Or are they technology provider, enabler, producing product for those power producers? So there are quite a few different vertical or layer in that vertical. So we want to know, we should know, okay, we should understand what we are investing in, and then and try to understand each one of those, the profile. So, and I think you asked about some of the uh, example on company, right? So there are many company that they're involved in that. Like there are some integrated. I would say right now there are not a whole lot of companies that purely, focusing on one category of renewable energy. But you can always look for some more diverse, because renewable energy at this point is only accounted for, let's say, 10 to 15% of the energy that we're consuming, whether it's in form of, electric power or oil and gas type of energy. So a lot of the company involved in renewable energy, they're actually not just purely focusing on one. They have to also diversify. So you can look for diversified, whether it's in the power utilities, right? So many electric power utilities, they have a portfolio of uh, renewable energy in solar, in wind, and hydro as well. So those are the type of company. The other one is there are other, for example, purely focusing on, let's say, solar energy, right? First Solar, and I can come up with a few name and to show you, and yeah, and and I think those are the things that we need to keep in mind.
Thank you
Now,
so much, Dennis. I think that's very helpful and really appreciate that. Now, shifting a conversation to traditional oil and gas companies. Now, for a value investor who's looking to invest in like maybe like an upstream company or a midstream or a downstream company, what are some factors that they need to consider when investing in such companies? So let's just talk a little bit about the oil and gas companies now.
yeah, for oil and gas company, again, well, first of all, go back to our circle of competence to make sure that we understand. I would say that uh, for oil and gas company, we have to understand that we live in a world that right now our whole um, modern life, modern economy, still based on it's really based on enabled by energy, and the majority of the energy is really fossil fuel based, and that's the fact. And the oil and gas company not only produce just providing energy, but in fact there's so many other aspect in our life in modern economy. Modern life is also based on byproducts from the oil and gas industry, and they're all kind of everyday item. If we look around, whether it's our home, our work environment, and the things that we use, Many of them has like the hydrocarbon content, right? The clothes we wear and the phone we use and all kind of items is got those contents. So I think certainly the oil and gas industry is a very vital part of our industry, that's for sure. And the things that we have to keep in mind is that oil and gas company oil and gas is more of a commodity. So commodity is also subject to like more of a cycle or cyclic and go with whether it's highly affected or um, um, impacted by the economic cycle. And it's also because it's commodity, whether it's due to certain other factor, let's say political environments, like geopolitics and all that. And those are the things that would affect is how those companies are performing. Also, government regulatory compliance and restriction, and as we all know, especially in whether it's not in North America and in Europe region um, energy business is highly regulated. So to get anything going, any major infrastructure project or capital project going, it takes a long time, right? The approval process, the consultation process, and all that. So a lot of the big company, when they start a project, they can burn through a lot of cash, take a long time before they even get a project going. So let alone, the return of capital, right, on the project. So I think those are the things that we want to pay attention to the time horizon. And upstream, that means like exploration, production, oil and gas exploration and production. So I think one thing that we should keep in mind is the quality of the asset that they own, right? Um, I mean, if the asset is great asset, then the cost of production is much lower, and the quality of the product is much higher, right? Less cost for the refiner and etc. Their cost structure, their capital structure, because these are projects that require very, I mean, it's very capital intensive, right? So also their cash flow and their debt level, because again, they have to leverage financially, they have to leverage. So look at their balance sheet and make sure that, they are strong, strong balance sheet. Make sure that they're delivering, good cash flow, and look at their management quality by looking at their return on asset, return on equity, book value, etc. And that would reflect uh, how good the management they are, right? So I would say, yeah, some of the example in this area. And by the way, I just want to mention to our viewer or listener is that um, I mean, this is just example of some of the company for everyone to look it up and learn about. By no mean is a recommendation of buying or selling or whatever, right? Some of the good company in this area is like Pioneer Natural Resources and Diamondback Energy and Ovintiv. There are many of them, Murphy Oil, EOG Resources, and of course you also got those big integrated company like ExxonMobil, Chevron, Imperial, etc. So yeah, so those are the upstream energy company and things to consider.
How about for midstream companies, Dennis?
Yeah, okay. Well, the midstream is more referring to the delivering of those products from the upstream, right? From the production. So we're talking about midstream is referring to typically is pipeline, right? So again, um, always start with the business fundamental. Doesn't matter what industry, whether it's up or mid or downstream, is the business fundamental. All those their financial metrics, how strong they are, their how stable they are. Now, midstream usually is more stable, right? But at the same time, they're stuck in between the upstream and the downstream. So I would say, most of those pipeline company, I would certainly look at uh, where they are, their position, right? their infrastructure. From where to where are those key energy production point or consumption point or process point? Um, and how I think with this, because their infrastructure is pretty much fixed, right? So I would more focusing on their management to see how well they can deliver, control costs, and deploying capital and delivering not only earning but also cash flow. And I would say look for things that why they are better than their competitor. Was it because of their geographical location of their infrastructure? Was it because of some added value or how they develop or deploy technology in terms of operation, mitigating risk, right? And also how they respond to, I would say, certainly look back in history to see how they mitigate not only risk but how they manage crisis situation, um, how they deal with the public, how they address environmental concern, and I think those are the quality that I would be looking for. Ultimately, business. Um, those are the fundamental that we certainly have to stick with.
And
And yeah, some of the example, yeah, you mentioned about example is, I mean, certainly like large pipeline company like Enbridge, right? Enbridge, they're one of the largest one, like TC Energy or TPL, and um, their Phillips 66, all those are big players in the midstream level.
thank you, Dennis. And lastly, how about for downstream, purely downstream companies?
Yeah. Okay. Downstream company is mostly referring to those in the retail side or the refineries, right? Taking the product from upstream, delivered by pipeline company and to their refinery. So they would refine it into various products and then sell it to whether it's gasoline, diesel to consumer, and also many of the byproducts to other business manufacturers and raw material production business. So I would say that when investing in this, again, in addition to fundamental, is really look for uh, the price fluctuation because what their ultimate business is profiting or taking profits from the spread between the um, the upstream oil price and the downstream, what they can sell, right? After refining or producing all those byproducts. So I think the cycle, the pricing cycle, the economic cycle, certainly affect their business as well. So I think that's the area that is that we need to pay attention to. And at the same time, they also operate a large infrastructure, refinery, very capital intensive. Again, look for, how well they performed in good and bad economic cycle and how they utilize and deploy their capital so that you can look at their return on investor capital, right? Look for their return on assets, and those are good indicator on how well their management manage all that. And of course, because they're facing the public, facing consumer, how well they manage, in terms of working with community, working with the public, addressing, various concern and etc. Um, so those are the things that we want to pay attention to. That's for sure. Yeah. And yeah, downstream company with retail, refinery, and mostly such as Marathon Oil, Valero Energy, uh, Phillips 66, and those are some of the larger, of course, Shell, right? So they are also in retail as well, and BP, right? BP, and now there talks or rumor about the two company may be in talk to merge or etc. So I mean, those are the company that we can start with.
That was very insightful, Dennis. Now you talked about, the circle of competence. Now let's say, for example, based on all the various factors you talked about, one needs to look into when investing in energy sector. Let's say
Hmm.
somebody has mastered the art of value investing in the energy sector, and they want to increase their circle of competence to another sector and value invest there. Now, would you recommend like the technology sector being a sector where they might want to explore in, whether it's the hardware tech sector or software tech sector? Would love
Mhm.
to know your thoughts on that.
Yeah, I would say first of all, learn about it, and I'm sure everyone nowadays in our life, we are the user of technology, right? In our everyday life. And whether right now we're talking through, Zoom and using those technology, and everyone every day we're using our phone, and I think a lot of the new technology deployed through our phone, so we can use it whether it's investing or communicating to our friend or finding our way somewhere else or doing our banking transaction. And technologies is in every part of our life. And using social media, for example, right? So those are powered by technology. So I think first of all, learning about technology, again, go back to, there's certain things that we all have interest in and they all different. So start with that. And you mentioned about hardware and software and whether it's communication, whether it's AI, whether it's a social media platform, or whether it's like company that uh, provide all of them, right? For example, like Apple, right? They produce hardware, the phone, many other products, the MacBook computer, and the iWatch, and etc. And they all tightly integrated and being enabled by their apps, their services, and also the provider or platform provider for many other apps, and those are software. So so you have the hardware layer and then the software, and then they create an ecosystem where everybody, would use everything, right? Within that ecosystem. So those are the things that we can all um, um, start paying attention to, or whether we drive a EV, which is technology based, or whether you're a gamer, right, using um, uh, product empowered by, like, say, NVIDIA and all those. So we can start with that. And but the most important again is pick something that you're interested in, and then learn about it, make sure that we understand the basic principle of it. Um, and I just spoke to several individual at another event just yesterday, and those are brilliant guys, and they know everything about blockchain technology, uh, cryptos, all right? Invest in some of the cryptocurrency and all that. So again, they have a strong interest, and that drive them to learn about those technologies. And then once they learn about, they believe in, those type of technology has a future, right? I would say that technology is certainly empowering our life today and into the future. So, the modern world, the economy, basically our everyday life is powered by technology, enabled by technology. So certainly investing in technology uh, nobody can afford uh, not to invest in technology, right? AI, um, with AI and everything technology based, and also come with the need for stronger cyber securities. And a lot of those are um, become necessity. So I think uh, all investors should really consider having technology in their portfolio and learn about it and start from something that they are familiar with.
So, Dennis, would you say that for somebody who's investing in the software technology sector specifically has potential for greater yields and returns as a value investor than maybe investing in the energy sector, whether it renewables or traditional oil and gas?
Okay. Now I see that both are necessary. Both are necessary. And but of course they have different characteristic and profile, and also risk and reward sector, right? Now, in terms of traditional energy that we just talk about, oil and gas, um, is a necessary, like absolute necessary item, necessity in everyday life. So that means, the demand for it is always there. You can't go wrong with it. So they become like a cyclical kind of industry. So the return is steady, but it's not exponential.
Mhm.
So that's why, oil and gas company, we're more focusing on their revenue, cash flow, dividends, and all that. How lower risk, lower return, but more steady, right? Because it's necessity. Now, technology, even though now it become a necessity, but technology is because of the development and the advancement is constant advancement, right? Innovation, creation, and new technology emerge on a daily basis. So it has the opportunity for exponential growth, like a hockey stick, right? But at the same time, it's higher risk. Higher risk being certain technology, it could be a hype for a certain time and then being overtaken by another technology, right? For a couple of years, everybody was talking about the metaverse or something like that, and now nobody talk about it. So when Meta or Facebook spend like hundreds of billions of dollars to invest in it, and then where is it now, right? And everything is superseded by like AI and etc. So we have to understand that in technology, there is higher risk, higher reward, right? But it's no question that everything is powered by technology. Then, of course, technology alone is a very vertical. So you mentioned about hardware and software, and again, different the hardware, right? So even software has to run on some sort of hardware, starting from such as right the basic CPU, central processing units in every computer or phone or any electronic, right? Or a GPU like those from NVIDIA that power everything. And then, of course, you have the lower layer of firmware, operating system to run on them, and then the application layer of software. So investing, I mean, each categories are both are necessary, but we should, also understand the different characteristic. Hardware, of course, it takes a lot of uh, development, a long time, a lot of effort, and also very capital intensive as well. I mean, if we look at company like um, TSMC, right, the Taiwan Semiconductor, the reason why nobody else can do better than them is they have been investing in all those manufacturing technology for a long time to establish themselves. So they have the advantage that it's hard for anyone to take over to take their market share, etc. Software also require a lot of capital investment in R&D development, but they're of course less capital intensive, etc. Right? But those are the two large layer. But in between, there are many application layer of the business. We're not talking about technology, right? Company using, let's say, providing data warehouse, centralized, computing platform, storage, enabling, cloud storage, cloud computing, and etc. So there's so many type of company that we can invest in a technology-based category.
Makes sense, Dennis. Now we're coming to a final few questions here. For somebody
Mhm.
who's looking to explore the concept of value investing more and is new to this area, what are some maybe like books, podcasts, conferences that you recommend they listen, participate, or read?
Wow, okay, wow, there are many of them. I would say now, in terms of books, there's so many type of books that teach people how to invest and how to calculate value. And I think that's the small part of it, just the technical part of it. I would say, the mindset is the most important. Learn the right mindset, the fundamental, the concept, the temperament, and all those. And I think one of the book that I always recommend among many of them, there are many good books, but one book that I would say I would recommend everybody to read it is Richer, Wiser, and Happier, and by William Green. And I think in that book, the author, William Green, he interviewed many legendary investor and really to try to understand how they live their life and how they look at things. And the mindset is where we start. So I believe you also read that book, right? And what do you think? And what's your take on that?
It was a fantastic book, and thanks for the recommendation, Dennis. I really enjoyed not just about the concepts of value investing, but about
Mhm.
mindset, success habits. So I definitely attest to that. It's definitely a must read.
Yeah, yeah. And podcasts, again, there are many podcasts, and I would say there is one I always enjoy is Manish Pabrai. Okay, he's one of the value investor, and he's definitely a Warren Buffett follower. Accidentally, stumble upon his book. Basically, he read Warren Buffett's book, and he become a very successful value investor. And he always go around to different university and try to share his investing insights. And he turned that into podcast. So I think, yeah, look it up, Spotify or other media, and that's Manish Pabrai, and that's a podcast that I always enjoy. And then in terms of conferences, now there most of the financial conference or investment conference uh, are really professional for professional. I would say for individual investor that may not be the best for value. And but one thing, well, one conference that I always enjoy and going to is very focusing on value investing is the Berkshire Hathaway's annual shareholder meetings. The annual shareholder meetings obviously is really for shareholders, but the majority of the shareholder meetings is not really focusing on the Berkshire's company's financial or report or the formal parts of it, electing director or shareholder resolution, etc. It's really on the question and answer period where we're talking about, some 20, 30,000 of like-minded value investor from around the world gathering. So it's more than that one day shareholder meeting session. It's about like, the few days leading up to that shareholder meetings and where there are other associated events happening during that week in Omaha, Nebraska. And obviously, Warren Buffett just announced his retirement back in May in the last shareholder meeting. And I was fortunate enough to be there as I go, every year and to witness the end of an era. So I'm not sure how many people will go again next year, but I would say that's the place, that's an events that not only we can learn, but also I always believe in proximity is power. So when you put yourself in that environment to meet other value investor and network with them and making contact and learn from them, and everything will start to grow from there. So that's what I would recommend. And look for other events as well. And there are other similar type of events. Um, like the Marco reunion and all that. So yeah, I can certainly provide a little bit more information if anyone interested.
Thanks, Dennis. And lastly, could you share more about your value investing coaching program, the structure, the duration, the logistics? Would love to learn more about that.
Oh, certainly. I do feel strongly about that. Doesn't matter what we do, everyone we should really learn how to invest, especially now there are again many other investing style or strategy. Um, there's so many things for everyone, right? But I think value investing is one thing that I really like because it's timeless, it's proven, right, by Warren Buffett and many other value investor. So I take what I learn, I take what works for me for years, and that try to share with other people. And especially, I feel strongly about that, and that's how I was able to move from my engineering, technical, and corporate career to now full-time investing and spending time on passing on and sharing that knowledge and insights and experience. So my program is really focusing on so I created the whole process. That's the process I used. That's the one that I mentioned, right? The five major step is rather simple, and helping people to basically the program is focusing on delivering, the necessary knowledge. So helping everyday people, ordinary people, to acquire that necessary basic knowledge, fundamental in investing. And then in the process, also develop the skills through practice, right? Using simulator platform. And so to also gain the experience, and ultimately to develop into a truly independent and confident investor so that you can go from finding the best company, knowing how to calculate their value, and knowing how to make decision on, at what price you're going to buy and sell and invest in them, and be able to make those independent judgment and where to find resources to continue to make those investment judgment and decision. Ultimately, the program is focusing on delivering, basically helping everyone to develop into an independent investor to create wealth, to invest and create wealth for themselves.
Great, great, Dennis. So, if our viewers and listeners want to get in touch with you to learn more about the program, what's the best way to contact you?
For sure. Now, actually, I'm in the process of updating the website, so it should be up again in a couple of weeks. So you can go to beaumontacademy.com. So Beaumont as BOWMONT academy.com, or you can look me up on a regular basis. I share, investment insights, updates with my investor group and also with my audience. So you can always look me up on Instagram, on Facebook, on YouTube, and just look for Dennis Wongman, WONGMAN. And also on Facebook, I have a investor group. It's called a Value Investing Group, and so you can also look it up and join the group, and where I share more insights with the group on a regular basis. So yeah, if you're interested in learn more, more than happy to help, and yeah, look us up and join the community, because I always believe in proximity is power. Once you plug yourself into a group of like-minded people, then you will learn a lot more from others, and we can always go alone, but I would say we will always go further and faster with a group or in a group, right? So
Great, Dennis. So that concludes the formal portion of our interview for today. We like to end our podcast with a fun segment called a rapid fire, where our viewers and listeners get to learn a little bit more about the personal side of our guests. Now, as part of this rapid fire, I'll be asking you three quick
okay,
questions. Are you ready?
sure.
Great, Dennis. Well, firstly, as this is a tech podcast, would love to learn what's your favorite app or a hardware product that you enjoy using?
Favorite apps and hardware products. Is that right?
Yes.
Okay. Well, I would say, okay, in terms of apps, two level, right? Personal level and a business level. I would say, the in terms of apps at a personal level, I mean, I love my stock. You know, I hate to call it a trading platform because I don't want to encourage people trade, but I found that it's so powerful that nowadays we can do a lot of things just on our handset, our phone with those app with all the comprehensive features. So that really make it so easy, doesn't matter where I am. So that's the app I use. But also back to, when I was in my corporate life, one of the best app that I use is Salesforce, right? Salesforce actually, before they become big, I use it like 2 decades ago almost. Yeah. So that's the best app. In terms of hardware products, I have to say, my phone. That's the best. Yeah, nobody can live without our, we call it a phone. Basically, it's a personal uh, whatever we call it, right? Assistant, right? So I would say that's the hardware product. I think going forward, I believe that things will change into something. It's all AI based. So technology is advancing very, very quickly.
Great, Dennis. Well, secondly, what's a book that you have read that has a big impact on your life and why?
I would say certainly the one that I just mentioned, but also I would say there's one Tony Robbins, Unshakable. I think that one is it doesn't really teach you on how to invest, but it does talk about uh, the world that we live in and why we should invest, and it does show us a lot of the way how we can start, and I think that one is quite impactful. Unshakable by Tony Robbins.
And lastly, Dennis, do you have any final words of wisdom for our audience, whether it's a short story or a quote or anything you'd like to end our episode with?
I would say for anyone of us, if we want to do well in life, to be truly financially success and independence, and I think we all have to do three things. One is uh, do your best in whatever you do, your job, your business, your domain expertise. Give it your best. Add value. The moment you're able to provide value, the money will come. You will be rewarded, right? So do your best, advance, keep moving on, keep moving up, create more capital, right? Create more capital. And then number two is invest that capital and invest it in, through the stock market, not in the stock markets, right? Through the stock market, you can find some great business to deploy that capital and invest in them because, those are global company and growing worldwide, globally, and growing every day, and so will your capital. And number three, and invest in real estate, and that's to protect your capital, protect your assets. And as long as there are human on this planet, there's always a need for real estate, from basic shelter to better living environment and all that. So I would say do those three things, and but the most important is before we start any of those, invest in yourself to learn about it. That's the best investment we can make. The first investment and the best investment we can make is to invest in ourselves in education to learn about it. And that's how we started, right? Even when both me and you are working as an engineer, we don't just jump right into, hey, I want to be an engineer. We start from, years of schooling and learn about it. And there's a lot of investment, right? Money, time, and educate ourselves. So the same goes with investing in stock or even in the real estate. So those are the things that I would say that's the most important.
Such a nice way to end our conversation, Dennis. Well, thank you so much for being on the show today, Dennis. It was an absolute honor and pleasure having you. And thank you so much for sharing your subject matter expertise in the field of value investing with a special focus on the energy sector. From the team at Energize, wishing you and your organization lots of growth and lots of success.
Thank you.
So there
Thank you
you
for the
have
opportunity.
Absolutely, absolutely, Dennis. So there you have it, ladies and gentlemen, our episode for today. And remember, a greener future is in our hands. I'm Arjun Chaudhary.